So, greetings, ladies and gentlemen. Today we will talk about how to grow your business with digital payments. In particular, I will tell you about how crypto processing works in details, what benefits you may acquire of implementing that. And we will start with a little bit history. So, 60 years ago happened a great payment revolution. Bank America, along with other partners, implemented credit cards. That invention basically completely changed the payment landscape and contributed to the modern economy. So before that, all market participants were using cash and checks, and that invention of credit cards, it won't be an underestimation if I tell that it completely changed the market. So now we have around 7 main means of payments. We, of course, have cards. There are a lot of them: credit, debit, prepaid, virtual. For the last 20 years, we also acquired mobile digital wallets, Apple Pay, Google Pay, which, well, again, shifted the market, and also some mobile payment apps. But now we have a new technology which was implemented like several years ago, and I'm talking about crypto, because I really firmly believe that crypto may change the payment landscape as credit cards done like 60 years ago. So now I will give you a little bit comparison of cryptocurrency payments and card payments, and will show you that crypto has certain advantages. So here we have like 3 main points why cryptocurrency is better than card payments. First, chargeback. Second, rolling reserves. And 3, free payout for end users. I'm not talking about that crypto is more secure because, well, banking technologies are developing quite fast, but, in terms of like 10 years, I believe that crypto will hold at least like 20% of all the market. Now, here's some statistics. So guys from Deloitte conducted a kind of big survey. There was like 2,000 or 3,000 participants, and 40% of all the customers believes that crypto payments may be implemented. 75% of retailers told that they are planning to start accepting crypto. So it's already happening, and a lot of businesses realizes that crypto can give them not only new customer base, but basically make everything faster, everything more easier. So now let's speak about how crypto processing works from the inside, because unfortunately not many people really understand that. This diagram holds like 3 main points: flow of funds, IML, and process. IML means anti-money laundering. So once you install the system, you can generate any wallet nominated in fiat currency, in digital currency, for example, Bitcoin or some stable coins. Then what you do? Your client initiates an invoice. A system generates unique wallet address. It cannot be broken. It cannot be somehow, nobody can get into that except yourself and your client. And the user sends payment. And at this moment, Crystal, chain analyst, or some other system conduct like manual check, the QAT check. So basically, we analyze the source of funds, whether this crypto is clean or not. And if we understand that crypto is marked as not clean, we will log the payments. After that, we have all the confirmation transaction, we spray it onto your wallet, and then you can use it, you can withdraw that, and basically do everything you want. One main point regarding the merchant model, which is the most popular with crypto processing. All exchanges are done off-chain. What does it mean? If you switch to boring accounting language, so once your customer pays you with crypto, you don't get that crypto on your wallet. But it's somehow like a transfer of title, and your crypto processor holds a liability towards you on the same amount, and then you can withdraw that funds from your crypto processor. Regarding fund withdrawal, it's one of the main concerns of many businesses. So like, okay, if I get the crypto, what will I do next? And how it works. Basically, you create a wallet denominated, let's say, in United States dollars. Your customers pays you with, let's say, USDT. So USDT and dollar is 1-to-1. 1 USDT means that you will get $1. So once you have a wallet denominated dollars, customer pays you with USDT, and you have denomination of one wallet in your, of $1 in your wallet. Then you can withdraw that funds either to the bank, if the bank is willing to work with a crypto processing company, or to EMI or payment service provider, such as, for example, Equire. So after your funds hit your account, it's basically fiat funds, and well, you can use them as usual. Now, one important topic. Basically, you can accept payments both in major coins and stable coins. And it depends on your risk policy. Like you can accept Bitcoins, and you can even have some additional revenue from that, like all your costs are nominated in fiat currency. So you accepted Bitcoin, and let's say you hold it. And you understand that, okay, in 2 weeks, Bitcoin will, I don't know, hit like 30,000, and you get additional 200% of profit. Or you may lose. But the thing is always to have a proper risk management in place. Like, for example, you can nominate, let's say, 5% of all your payments in some volatile crypto, and other you can nominate in stable coins. So that's why you always will do like asset liability management. The stablecoin is one of the many types of crypto. And basically, this is coins which are packed onto the some traditional assets. Let's say, I don't know, there's asset-backed bonds. So that means that once I issue the bond, I have some assets which are backed by obligation. Like, I don't know, we have mortgage-based bonds, let's say, for the banks. So how it works? I issue $10, 10 USDT, and I put $10 onto the banking account. And for the all time, when I have 10 USDT, the $10 will be a line on the bank account. Of course, I will invest them in some treasuries or, you know, some very less risky assets, but still the core idea that all the issued crypto is fully backed with some real assets. It can be gold, it can be dollars, it can be fiat funds, it can be securities, so it depends. And there are like 3 types of stable coins. The first one, as an example, USDT, we call it regulated. Why? Because all the funds are stored in one of the banks of New York. There is a full audit in place, and you always understand that, you know, like whole issuing of USDC is fully backed with a good asset on the banking account or brokerage account, depends. Then we have unregulated, centralized, unregulated stablecoins. Basically, it is USDT. It can be backed with fiat funds, or it can be backed even with some assets, but there's no audit in place. Basically, you never know whether it's really backed or not. So chance of scam, let's say, is a little bit higher. And we have completely decentralized stable coins, and the backing mechanism there can be quite complicated. It may be algorithmic based, you know, it's like pure financial engineering. So from the regulatory point of view, centralized regulated stable coins, well, you can look on them like on, you know, traditional securities, and they are really fully backed, and it's easier to protect all the customers using them. Second model of crypto processing. Well, it can be called enterprise model. So it works basically the same with the merchant, but the only thing that is all the exchanges conducted on chain. So as I mentioned, in merchant model, once you get the payment, it's not within your physical, it belongs to your crypto processor. But here, everything conducted on chain, and all the transactions are conducted through the blockchain. So this model is, well, better for institutional players and mostly like brokers, exchanges, and promotes. And now the last business model, it's basically just create a crypto wallet. So it's like you have banking accounts, you know, you just install, for example, B2B and Pay, pass the KYC, all that stuff. And then you just can accept crypto, store it with your wallet, and then send, your wallet address to your customers, and then they will credit funds there. So it's more like banking account, but it's a little bit less complicated stuff. So, and finally, I will tell you about ourselves. As of now, we are full-scale ecosystem for corporate market players. We facilitate a lot of services, including providing like technology, some, high-caliber tech like liquidity hubs, money management platforms, wide level of trading platforms. Of course, we have our own crypto processing regulated in a couple of countries, and we are acquiring more licenses. Our digital banking services and venture funds, which mostly invest in some projects which are close to our heart and to our ecosystem. So please subscribe to our YouTube channel, to our Telegram channel, watch for the news, and thank you.